Welcome back to Investing Talk Podcast. Today, we're going to be looking at Robinhood Markets, or Hood, and how it's doing in this crazy market. Early March 2025 has been a little rough for investors, with the S&P 500 and Nasdaq both down.
President Trump's tariff policies are not helping. They're creating a lot of uncertainty, and that's causing some investors to pull back.
It feels like everyone's just kind of waiting to see what happens next. But in all of this, Robinhood seems to be doing its own thing, almost like it's got its own beat. We've got some interesting information here, a technical analysis, the latest news, and a look at where Robinhood fits in this shaky market. Let's start by talking about how the stock has been doing recently, because, man, it's been all over the place.
It has. From a high of $66.08 in February, Hood dropped to about $49.93 in early March.
It's a big drop.
It is roughly 24%. Part of that is because of the overall market being down and also a crypto sell-off that messed with trading volume.
That's a pretty steep drop.
Yeah.
Is this a sign of more trouble, or could this actually be a good time to buy? I've seen some talk on X, and some people are saying that Hood might be bottoming out somewhere between $42 and $50.
That's a range to keep an eye on. Technically speaking, there's a lot of support around that $42 to $45 zone. That could be a jumping off point if the stock goes back up, but there's also a resistance forming around $52 to $55. That's a level that Hood will need to break through to show a strong upward trend.
Okay, so we've got those support and resistance levels,
Mm-hmm.
but what are the other technical indicators saying? Are they saying buy or sell, or are they just confusing?
It's not a clear-cut situation, which makes it interesting. The 50-day and 200-day EMAs are below the current price. This usually means a bullish long-term trend, but the 5-day moving average has made a bearish crossover, and that means there's some short-term downward pressure. It's kind of like a tug-of-war right now.
So maybe a pause, not a complete reversal?
Right. Think of it as taking a break before the next move. If we look at the RSI, it's near the overbought threshold of 70. This doesn't automatically mean sell, but it does suggest that the momentum could be slowing down. We've also got the MCD, which is showing a buy signal, but even the MCD has been going downwards lately. And then there's the CCI, and this one's saying something totally different. It's saying that things are overextended and there might be a short-term sell signal.
So there are mixed signals, but that $42 to $45 range seems super important. If a Hood can stay above that, it could mean a rebound. Now let's talk about the news and events that have been affecting Hood's price. One big one was Robinhood's $29.75 million settlement with FINRA.
Right. This settlement puts an end to a few investigations into how Robinhood has been doing things in the past, especially with order handling and supervision. It's important to remember that Robinhood didn't admit to doing anything wrong, and they paid for the settlement with money they already had.
So not a big financial hit for them.
Not at all. It could actually be a good thing. This settlement gets rid of some of the uncertainty about regulations that's been hanging over the company, and that could make investors feel more confident. Now, if we switch over to their Q4 2024 earnings report, we see a whole different story, one of crazy growth. Their revenue beat what people are expecting, and it was over $1 billion for the quarter. And get this, their crypto trading revenue went up by 700%.
That's incredible.
Yeah,
Especially with how shaky the market has been.
definitely. And their gold subscription service also saw record growth. So people are really interested in their premium offerings.
That's impressive.
Robinhood is releasing new products and growing their system. They're getting attention from analysts. Like Morgan Stanley named Hood a top pick after they released their earnings. They're saying it has a lot of potential for growth.
And I've seen people on X talking about their price-to-earnings ratio. They're saying it looks pretty good, especially for a company that could grow this much. Some people are even saying Hood could reach $125 to $150 in the next couple of years.
That's a big goal. But CEO Vlad Tenev wants to increase revenue 10 times in a decade. So maybe that level of growth isn't impossible.
That's a bold plan. So we've got this company with strong basics, exciting potential for growth, but they're in a market that's, well, a little unpredictable right now. President Trump's tariff policies are making things uncertain, and that affects everyone, even Robinhood.
You're right, the market is a bit rocky right now, but there's this feeling that Robinhood might be able to separate itself from those bigger market problems.
What makes people think that?
Their Q4 earnings are a big reason. They showed that even when things are tough, Robinhood can still do well. Their strategy of expanding their products is another key thing. They're not just sitting around. They're looking for new ways to get users involved and make more money.
Their moves lately, like Robinhood Trivia Live and buying Market Snacks, which is now Robinhood Snacks, show that they're thinking creatively.
They want to be more than just a trading platform. They're making a whole system to teach and entertain users while giving them the tools to invest.
It's like they're building a whole financial world, which is kind of cool. And then there's the possibility of growth in zero DTE options trading, where Robinhood is already doing well.
That's something to watch. Now, thinking about all of this, let's look at some ways people might invest in Robinhood. A lot of investors are trying to figure out the best way to go about this. We can talk about 3 ways to approach this. First, you could think about Hood as a long-term investment.
Because of their potential for growth and what some people think is an undervalued price.
This approach makes sense if you believe they can reach those big goals they have.
What about a shorter-term approach?
With how the market's going up and down, there could be chances to make money from Hood's price changes. This is riskier, but it's a choice for people who are okay with that.
It's all about finding the strategy that fits your own risk tolerance and investment goals. So we've got long-term growth, short-term trading, and what was that third approach?
The third one is more going against the grain. It means betting on Hood doing well while the market is in what some call extreme fear.
So basically going against what everyone else is doing and believing Hugh can handle things better than most.
Exactly. It's a bolder move, but it could pay off if you're right. Of course, any investment has risks. You have to do your own research and understand the company, the market, and the possible downsides before you make any decisions.
Nobody should just jump in without doing their homework first.
Okay.
But it sounds like Hugh is a really interesting example right now. You have these good things happening with the company, like strong earnings and new products, but it's all happening while the economy is uncertain.
It really shows how complicated investing is these days.
So we've covered a lot. We talked about the technicals, the news, what's happening in the market, and even some ways to invest. What are the important things for our listeners to remember?
The main thing is that Hoodis is a stock that goes up and down a lot, and that's probably going to keep happening, especially with how the market is now.
It's not for people who get scared easily.
But even though it's volatile, there are reasons to think Hood will do well in the long run. They've been growing a lot, they're making new things, they're expanding their products, and they're attracting younger investors.
They're definitely changing the financial world, and that's getting attention.
They're also showing they're tough. They've dealt with regulations, market drops, and even that whole GameStop thing, and they've come out stronger every time.
They've definitely learned from those things and changed.
And being able to adapt is so important in today's world where things are always changing.
So it sounds like Hood is a company worth keeping an eye on, even if you're not ready to invest yet.
I think so. Their story isn't over yet, and it'll be interesting to see what happens.
I'm definitely more interested in Hood now than I was before we started.
Me too. It's a company that makes you think differently about the future of finance.
Before we finish, I want to give our listeners something to think about. Do you think Robinhood can reach their big revenue goals? What role will things like regulations, how the market is doing, and competition play in what happens to them? There are so many things going on. It's really interesting.
There are a lot of factors, and it'll be fascinating to see how it all plays out and what happens to Robinhood.
We want to know what you think. Tell us in the comments what you think will happen to Robinhood. Share your thoughts and any questions you have.
If you liked this episode of Investing Talk Podcast, make sure to subscribe so you don't miss any more conversations about finance and investing.
And if you found this episode helpful, give it a like. That's all for today. See you next time, and happy investing.